Hey guys, welcome back to the channel. In this video, I'm going to go over how much dividend income I made from high yield ETFs for October and go over some market news. As always, don't forget to smash that like button and share this video if you like this type of content so the algorithm gods know that I'm here. Hit subscribe if you're new so you're alerted every time I publish a new video about stocks, investing, finance, and news. But before I get started, a quick disclaimer like always, none of this is financial advice and you should always consult a licensed professional. With that out of the way, let's get into it. All right, so we're going to hop over to the portfolio. As you guys can see, this is a live Robinhood account. This is not a screenshot. Okay, so for the day, I am up almost 4% ending October 31st. Happy Halloween to anyone who's celebrating it. All right, for the week, ending a little bit. All right, we had just a really volatile, choppy week. All right, but I am up about 1%. Again, we went into big tech earnings. As you guys can see, this big pump right here. This was into big tech earnings. You had companies like Amazon, Microsoft, Google, Meta, all reporting earnings, right, on top of the federal funds rate. So I'm not surprised that we had a huge sell-off right after that. You know, again, the market was kind of pricing in that 25 basis point cut. And, you know, promptly we had a decent sell-off right after that, right? Congratulations to anyone who did buy the dip, all right? I personally was able to get just a couple of shares of BM&R. I just added to my BM&R position, but that was it for the week, right? We ended kind of flat. Now, for the month, because this is an October update, you guys can see I am trading flat, all right? I am down 25 basis points. I will take it. All right. I will definitely take it. It's better than being down, you know, way more like 13%, 14%, right? My portfolio all-time high was, you know, like 385, 386 or so. So maybe we'll get back up to that. We'll see. All right. I am very bullish. I'm still very bullish on the AI thesis. And I think as we continue to head into November and December, you know, more things will continue to play out. Okay, so let's move on. So we're going to be talking about PLTW, NVDW, HOWW, WPAY, and MSTW. Okay, and then at the very end, instead of using a high-speed, you know, notepad, instead what I'll use is Snowball Analytics, all right, for you guys because it's a lot easier on the eyes. Okay, so here we are in Snowball Analytics. And the reason why I like to use it is because it's fully transparent. You guys can see all of my metrics, how many shares I have, you know, what's the capital gain, what's the total return, all of that stuff, right? Okay, so let's get into this. So this is the Roundhill NVIDIA Weekly Pay ETF, NVDW. Okay, so let's scroll down. You guys can see NVIDIA just had a huge pump. And this was because of GTC, right? The GTC conference that they just had where they were talking about new partnerships, new hardware that they're launching, how much, you know, revenue they expect, and kind of just playing on to, you know, all of the CapEx spending that's going on in the industry and why that is bullish for NVIDIA. So it was a really great conference. I recommend people actually go watch it. We're going to cover just a piece of it because I think it's very important. So I've said this in previous videos whenever I covered NVIDIA that, you know, their CUDA library is one of the most important things that they have. No other company has it. Not even AMD, which is one of their biggest competitors, has it, right? Jensen Huang has said that AMD is a great hardware company, but they are not a platform company. And that is exactly what NVIDIA is. And it's because of their CUDA library. All right, let's take a listen real fast.
Application, which is the reason why it's taken so long. It's taken us nearly 30 years to get here, but we did it one domain at a time. This is the treasure of our company. Most people talk about the GPU. The GPU is important, but without a programming model that sits on top of it, and without dedication to that programming model, keeping it compatible over generations. We're now CUDA 13 coming up with CUDA 14. Hundreds of millions of GPUs running in every single computer, perfectly compatible.
So did you guys catch that part? He's saying that this CUDA library, right, this treasure of NVIDIA, everyone talks about the hardware, you know, the GPUs, how fast they are, the power consumption, you know, is it an inference chip? Is it, you know, this type of a chip, you know, GPU, etc. But what is really going to set NVIDIA apart from the rest of the companies out there is their CUDA library. Well, they have everything from robotics, logistics, automotive, and even like science-based stuff, things like physics, medicine, research. It has everything. They've tokenized pretty much everything, and it's all because of their CUDA library. So this is a part of why I'm still very bullish on NVIDIA even today. You know, back in, you know, February, there was people saying, oh, NVIDIA is dying, NVIDIA is a dead company, which was silly in my opinion, and that the AI data center thing was, you know, over and done for. DeepSeek is here, it's all over, right? that was when I bought into NVIDIA around that time. And I'm still bullish on that company now and definitely well into the future. Okay, so here we go. Here's the metrics that you guys love and care about. So right now I have 1,151 shares of this ETF. Okay, I am up 20.3% with the dividend factor in total return. I am up 47.4%. All right, for October 28th, NVDW gave me a dividend distribution of $544. Not too bad. All right, next up we have PLTW from Roundhill. If we scroll down, we can see that just PLTW has been doing really, really well. I've added a couple times over the last couple of weeks to this position. And as you guys can see, just over the last week, it has ripped to new all-time highs. And that's because Palantir, the underlying stock, has been doing really well, right? They announced a couple new deals. They were, mentioned by Jensen Huang at GTC. They have a lot of new partnerships coming up. So again, I'm very bullish on Palantir as a company. Scrolling down, I still have just 1,211 shares of this ETF. I haven't added to it this week. My total, or actually my share price or capital gain is 24.4% in the green. Total return with the dividends factored in, I am up 32.2%. Not bad at all. For October 28th, PLTW gave me a dividend distribution of 1,205. So I will definitely take that. Moving on, we have WPAY, which is a basket of all of the 1.2x leveraged ETFs from the weekly pay lineup, right? But this does not include commodities or index-based underliers, right? Things like, next ETE or something like that. This only include, and this doesn't even have those two new ones, GDXW or GLDW. It's not going to include those because those are commodity-based. All right, but WPAY is basically just a basket of all of those leveraged funds. As you guys can see, it's been doing really well against the S&P 500. Scrolling down, I still have 1,734 shares of this ETF. I don't plan to add to it at all. For my capital gain, I am down 1.7%. But when you factor in the dividends received, I am actually up 2.1% in total return. All right, scrolling down, you guys can see for October 29th, this gave me a dividend distribution of 1,085. Not too bad. All right, I like it. I'll take it. Moving on, we have the Roundhill weekly pay ETF, HOWW. Scrolling down, you guys can see Robinhood has been doing really well. I have not added to this position in quite some time. I don't plan to add to it. I'm fine with, kind of the value or the amount that I have in this ETF. All right. I'm still very bullish on Robinhood, of course. So for this ETF, I have 567 shares of this ETF, and I am up 15.2%. But when we factor in the dividends, I have a total return of 36.5%. Now for this week, October 28th, HOWW gave me a dividend distribution of $482. So I will accept that. Moving on, we have MSTW, which is pretty much the hated stepchild of this basket of ETFs, right? MSTR has not been doing well. It's just been under so much selling pressure. People who are in MISTI are getting out. People who are in MSTW are selling out. People who are in MSTR common stock are getting out. And I fully understand, I guess I understand why, right? It's just MSTR has just been going down. It's been the worst performer over the last couple of months. As a matter of fact, it's probably the ETF that's dragging down WPAY, if anything. But I am still very bullish on MSTR long-term, all right? I'm not looking short-term, 3 to 6 months out. I am thinking long-term, 1 year to 5 years out, okay? Even longer than that, for MSTW, specifically for MicroStrategy. All right, so scrolling down, again, doing really, really horrible. I don't know what's going to happen to this ETF. Again, there is that risk with all of the weekly pays that if the underlier was to lose 83% in value, that the ETF would pretty much, go to zero. Will that happen with this ETF? Is there a reverse split, that's possible or something or some type of split? I don't know. I don't believe there is. I don't think that Roundhill will do that for this ETF, not to add FUD to the, to this, but, it is just a risk and why people need to understand these products, right? Because even if MSTR was to have an insane rally up, because of all the negative compounding, from the volatility drag, this might be a little hard to recover. But again, it is what it is. All right. So scrolling down to, my metrics, I have 1,642 shares of this ETF. I am down in capital gain 37.2%. but with total profit, I am down just 24.3%. Again, the dividends received kind of help offset those losses. All right, scrolling down, MSTW on October 28th gave me $589 in dividend distribution. So I will take that. All right, let's add everything all up and see what it looks like. As you guys can see, for this month, for October, this is how much I made in dividend distributions from these ETFs, okay? You guys can see that over the last couple of months, it has just been increasing, all right, because I reinvest a lot of the distributions back into the portfolio. So very happy with where this is trending and, the way it's going. I don't want to be one of those, guys out there, that are making like $100K a month. I don't want that, personally. I want to practice a little more, risk management in my portfolio. And I've talked about this at great length in my last couple of videos, but I am moving a lot of the distribution back into growth products, back into growth type of assets like VGT. So anyways, with that being said, let's move into the market sector. So with that being said, let's move into the market news updates, okay? All right, so Palantir again reached new all-time highs, all right? This is crazy for Palantir. Palantir reached $200, so congratulations and shout out to anyone who is holding PLTW or Palantir. This stock has just been going absolutely crazy, and again, I'm still very bullish. It is one of the best AI companies out there. Aside from someone like OpenAI, the thing I like about Palantir is that, Alex Karp has said this multiple times that, we want to show you that we could provide value before you pay for the product or service. And, they have convinced a lot of companies of the value that they bring, that Palantir brings. So I'm very bullish on Palantir, not just because of the defense contracts, but because of the commercial adoption. It's slowly starting to get there. You can see year to date that Palantir is up 166%. There was a huge sell-off earlier in the year. A lot of people got out. A lot of people said Palantir is never going to see, new highs again. It's going to continue going down. It's overhyped. It's a meme stock. Well, I am just curious where those people are nowadays, so it is what it is. All right, moving on, we have NVIDIA. And again, shout out to any NVIDIA holders, but NVIDIA has reached new all-time highs, breached the $200 a share, okay? Absolutely crazy. Again, just NVIDIA, you can't have artificial intelligence without NVIDIA. So I'm very bullish on them. I just talked about their CUDA library. I recommend people go back and watch that GTC conference, all right, that keynote address from Jensen Huang. You'll understand why there's so much hype for NVIDIA and why they are pretty much at the center of this AI thesis. All right, my AI companies, the ones I'm betting on is Palantir and NVIDIA. So I'm very, very comfortable holding these through the rough times, through the pullbacks. And whenever there are pullbacks, I want to add to these positions. I really do. Okay, so we also had Bitcoin. Bitcoin has just been not doing so hot. Okay, so we're going to come back to Bitcoin and we're going to come back to gold because gold had a huge sell-off. As you guys can see, it just reached new all-time highs of 4,359, and then it just dropped. Okay, dropped to almost 9%, 8.6% here, right? So it's slowly recovering. Who knows if it's going to continue back up? This was right after, the whole, visit to China by Trump and those trade war narratives starting to die down and, all that other stuff. Plus we also have, the Fed that's cutting rates, which would have been bullish for something like Bitcoin and for gold, but it doesn't seem to have taken yet. All right, guys, so it is official now. Roundhill Investments has launched GDXW and GLDW. All right, they finally launched these two ETFs this week, and I'm pretty excited about this, okay? And I'm going to explain why I'm excited about this, and I'm going to just give you kind of, some of the data points that I'm using for my own investing thesis. All right, so let's listen in on Paul Tudor Jones. He was on CNBC a couple of weeks ago, so this interview is actually, I believe, a couple of weeks old. But in this video, they're talking about, what's his thesis, the market, and he's saying that the market's going to go up, that the environment is just ripe for it, right? Regulatory, interest rates, monetary policy, everything, right? Everything is perfect right now to create this really large bump up in the market. So let's just listen in.
Going to go up without flows and without a story. The story's there. It's the combination of the most unique and aggressive fiscal and monetary conditions that we've ever seen.
Okay, if you're right, who are the winners then in that, and who are the losers? Because right now we're looking at NVIDIA obviously being a major winner. Even AMD today, major winner, but there's this unique arrangement that's almost circular.
The circularity makes me nervous. I would say, and I'm going to think of it in broad terms, I think what the markets are telling you, this is an inflation story down the road. If you look at the biggest winners, right? The biggest winners are gold. I think it's up 46, 47%. Bitcoin, I want to say it's up 50 or 60. I'm not even sure.
Right. So essentially he's saying that, further down the line, just like Kathy Woods was saying, that this could turn into an inflation story, right? And his idea, his thesis is that this will be a gold and Bitcoin story. Probably next year, maybe the year after, who knows? Nobody has a crystal ball for any of this, right? So that's just one data point. All right, let's listen in now on Michael Sonnenfeld, who's the founder of Tiger 21. If you guys don't know who Tiger 21 is, they are a ultra high net worth peer advisory group. In order to be a part of this group, you need to have certain criteria met. I believe you need to have at least 100 million. All right, so this is pretty much the ultra rich, okay? So let's listen in on what he had to say about all of this, kind of a survey that he did, for his members. So let's listen in.
Sonnenfeld is back with us now. Michael, it's good to have you on. This is a stock market that, not the last couple of days, but really keeps going up. Are we seeing any more love from your members about stocks, or is it still really about real estate?
Actually, they just pulled back a couple points in the last quarter from the stock market and from real estate, still strong in private equity. But for the first time, cash is coming up a little, fixed income is coming up a little, and gold and Bitcoin. So a little bit of a shift, maybe a little bit of caution.
So there you guys have it. According to the survey done on Tiger 21 members, a lot of them are moving kind of away from the stock market. They're moving away from real estate. They still have a lot of exposure to PE, private equity, but they are putting some focus on gold and Bitcoin. And I wouldn't be surprised if, their allocations probably get a little more into gold and Bitcoin. Again, gold and Bitcoin, they should be treated as hedges against, inflation, right? As a bet against the US dollar. And he goes on to say that once you reach a certain level of wealth, it becomes all about preserving that wealth and making a little bit on it versus taking outsized, risk, outsized bets to build up your wealth, right? Because a lot of his members, making about 100 million or reaching 100 million, now they're in that wealth preservation mode, right? They want to pass it on to the next generation. Anyways, guys, I just thought that these were two interesting conversations. And again, I like to listen in and just take it as a data point for my own investing thesis. Okay. So again, I'm very excited about these two ETFs. I'll probably be opening a position in one of them. I haven't decided which one I want to go with. But, I will be opening a position once that margin maintenance comes down a bit. All right. I don't know when I'll do it. When I do it, of course, I will make a video on it and I will announce it to you guys. All right. It's not a buy signal, not financial advice, of course. All right. So moving on, we have news from the Fed. Okay. The Fed finally cut rates again, but Powell raises doubts about easing at the next meeting in December. And this is what kind of sent the markets going down. All right. Moving on, we have the Fed cutting rates again, but Powell raises doubts about easing at the next meeting. All right. And this is kind of what set the markets down. By a 10-2 vote, the central bank's FOMC lowered its benchmark overnight borrowing rate to a range of 3.75% to 4%. In addition to the rate move, the Fed announced that it would be ending the reduction of its asset purchases, a process known as quantitative tightening, on December 1st. I think this is extremely important and a point that maybe a lot of people may have missed. Everyone was kind of focused on the interest rate cut, but I think this right here is the real story. The Federal Reserve on Wednesday approved its second straight interest rate cut, though Chair Jerome Powell rattled markets when he threw doubt on whether another reduction is coming in December. All right. In the committee's discussion at this meeting, there were strongly differing views about how to proceed in December, said Powell. A further reduction in the policy rate at the December meeting is not a foregone conclusion, and it's far from it. He later added that there is a growing chorus among the 19 Fed officials to at least wait a cycle before cutting again. Traders lowered the odds for a December rate cut to 67% from 90% a day ago, according to the CME's group's Fed Watch tool. All right, here's the bigger piece. All right, here's the bigger story, right? Available indicators suggest that economic activity has been expanding at a moderate pace, which is good. Job gains have slowed this year, and the unemployment rate has edged up but remained low through August. As more recent indicators are consistent with these developments, the statement said inflation has moved up since earlier in the year and remains somewhat elevated. So here is the big piece. Officials lately, though, have said that they see slightly higher risk posed by the jobs picture. So the labor market is starting to show cracks, right? Along with the interest rate decision, the Fed said its process of reducing the amount of bonds it holds on the central bank's $6.6 trillion balance sheet will end. The program, also known as QT, had shaved away some $2.3 trillion off the Fed's portfolio of treasuries and mortgage-backed securities. So why is this very important? Because he announced the end of quantitative tightening. We have not been in quantitative easing, we're not even close to it. Okay, the interest rate coming down, while that was important, is not full quantitative easing. All right, when the Fed starts announcing that it's going to use some tools to start buying up treasuries and MBSs, that is when we enter into quantitative easing. All right, this is going to be so important what he says at the next meeting and probably in meetings later. So I'm kind of not betting on a rate cut in December. As a matter of fact, you really shouldn't be betting on rate cuts to begin with. But I'm not really shooting for the stars here. I don't think it's going to happen. I could care less if it does or doesn't happen. I think the market is still going to rally regardless. All right, guys, that'll do it for me. Hope you guys enjoyed this video. Hope you guys were entertained. Hope you got some value from it. As always, enjoy your weekend. Get away from Finance Tube. Get away from Finance Land. Go out, touch some grass, have a beer, have a barbecue, and I will see you guys in the next video. Take care.